Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, this Wednesday morning, the cues coming out of global markets are not very encouraging, given the fact that we saw Wall Street tumble over 1% in the wake of the debt ceiling stalemate. And the SGX Nifty also hinting at a lower start for the Indian markets. Over the next 30 minutes, we'll be talking about all these cues and stocks that will be in focus are Ashok Leyland, Biocon, Nykaa, Hindalco and a lot more. We'll be discussing all that, and we'll of course be getting all your stock-related queries answered by our expert on the show. So if you have any queries, fire them in on our YouTube feed and we'll have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Stocks closed sharply lower on Wall Street as the stalemate over a deal to raise the debt ceiling continues. Some Republicans also raised questions about the accuracy of the 1st June deadline mentioned by Treasury Secretary Janet Yellen in her several warnings about a potential default. Asian markets open lower on weak cues from Wall Street. The SGX Nifty, as I said, is hinting at an open below that 18,300 mark for the Nifty. Strong quarter for Ashok Leyland as it delivers an operational beat. Margin expands over 200 basis points while volumes grow over 22%. Watch out for Hindalco and Nykaa as they report their 4th quarter earnings today. Well, let's get on board then. Our technical expert for today, Kunal Shah of LKP Securities, is joining in this morning. Good morning, Kunal. Yesterday, we saw some bit of volatility set in the last hour of trade, and post 3 p.m. the markets kind of shaved off all their gains that they saw during intraday trade. In fact, the Nifty just about managed to end above that 18,300 mark, and the SGX Nifty giving out negative signals this morning as well. So where do you expect the Nifty to take support in today's session?
Good morning, Nandita. I think in the last at least 5 to 6 trading sessions, the market has been quite volatile. And even with the global news, which are not positive, we are expected to open gap down by almost 70 to 80 points. Looking at the structure, the long-term structure still remains very bullish for the Indian markets. But yes, near-term hurdles will be there. If you look at yesterday's trading session, 18,400, 500 continues to be a strong resistance. Even on the higher end, if you look at the monthly expiry, the options data 18,500 has added significant amount of open interest on the higher end. So clearly a resistance is visible on the upside. On the lower end, 18,200 has been a strong support. Whenever we try to touch that level, we are again seeing bounces from those levels only. So I think it's a range in which Nifty is stuck right now. 18,200 is a support and 18,500 is a resistance. Now, since the resistance is very strong on the upside, I think rally should be utilized to sell the index. We could test again 18,200 on the downside. So again, the approach should remain on a sell on rise approach within this broader range, what I'm expecting. Talking about the Bank Nifty index, again, this has been one of the outperformer in the recent times. Now the index has been facing hurdles at higher levels where 44,200 is a very strong resistance on the upside. Till the time we don't surpass this level, we expect consolidation or slight downward tick in the Bank Nifty index as well. The next support for the index is at 43,500, what we expect to touch on the downside. Once that is breached, 43,500 on a closing basis, we can expect the correction to accelerate from those levels. So I think from both the ends, whether it's Nifty or the Bank Nifty, it's probably a range bound to a mildly bearish kind of a view. I will be bullish on Nifty only above 18,500 and for the Bank Nifty only above 44,200.
Right, those are the levels to watch out for on the Nifty and the Bank Nifty. Let's also talk about the stock of the day. According to me, it should be Ashok Leyland, given the fact that it has, reported numbers which are an operational beat. Profit has come down on a YY basis. However, it's still above the street estimates. In fact, revenues have grown over 11,600 crore rupees. And if you look at the EBITDA margins, that has come in at, it's back to double digits, somewhere around 11% vis-a-vis 8.9%, last year. If you talk about brokerage views, Nomura has a buy rating on the stock with a target price of 184 rupees a share. It believes that the CV cycle will stay positive given the demand framework, and Ashok Leyland is expected to post, industry-beating growth going forward. That's Nomura's view. What's your own view on the stock? Given the fact that the numbers have been pretty good, do you expect, it to approach its 52-week highs anytime soon? And we also have queries coming in from Ishu Singh, who wants to know what to do with the stock now.
I think, Nandita, if I talk about the entire auto space first, I think in the last 2 weeks, auto space has seen a massive buying from the lower level. So I think a very good base formation has been done on the auto space, specifically talking about the Ashok Leyland. I think the structure is extremely good. Now, this is one of the stock which has been very underowned in the entire auto space, and it has been through its own phase of correction in the last 1 year or so. Now, a very good bottom has been formed on the lower end. In the last 1 month or so, we are seeing the uptrend resuming. Higher high, higher low formations are clearly intact in the stock. I think it's a very good bet on the long side from the current levels, a safe bet as well, because I don't see further downside from the current levels. So currently it is trading somewhere around 152 or so levels. Now 140, 145 is a very, very strong support zone. I don't expect this support zone to breach immediately. In fact, you can expect targets of at least 170, 175 on the upside. So from the current levels, if you can see, I can expect almost a 15, 20% kind of a move on the upside. So I think it's a very good positional bet which one could hold on to. If you have it already in a portfolio, keep a stop loss of 140 on the downside. And if not, then kindly add it at the current levels. The chart structure looks extremely good.
Well, chart structure for Ashok Leyland looking extremely good, and expect a target of somewhere around 170 to 175 according to Kunal. Let's also talk about Godrej Consumers. That is a hot brokerage call for the day, given the fact that HSBC has upgraded the counter to buy from a hold and has raised target price to 1180 rupees versus 960 rupees per share. In fact, the brokerage believes that the company is likely to enter a phase of structural growth. And the valuations are pretty tenable, given the fact that the growth outlook when it comes to the company has improved. If you look at the stock, it hasn't really done much after it reported its earnings, but it's still near about that 52-week highs. What are the levels that you would be watching out for in this counter now?
So if I talk about Godrej Consumers, I think the stock had recently seen a small breakout where 993 was a resistance for the stock. Post that breakout, we have seen buying from the lower levels. So as long as the stock stays above 993, the view still remains positive. One can initiate long positions even here, add on to their long positions. 993 should be a stop loss on the downside. I expect targets of 1080 to 1100 on the upside in the very near term.
Right, those are the levels to watch out for when it comes to Godrej Consumers. Hold that thought, Kunal. We'll be coming back to you in just a bit. Let me also introduce our next guest. Hemant Shah, who's the fund manager at 7 Islands PMS, is joining in this morning. Good morning, Hemant. Good to have you on the show. Firstly, I want to start by asking you your views on the markets, given the fact that we are just about 500 points short of life highs. So what is the kind of strategy one should adopt at these elevated levels when it comes to the markets?
Sure. Thank you so much for having me. It's my pleasure to be in your show. Our strategy has been very simple. We are bullish, though the index is just 500 points away from the fresh high. But I think fresh highs are just the number we feel. And we have been bullish, and the strategy should be very, very clear. Wherever there is, say, for example, visibility, validity, and evaluation. Wherever there is any favor in this, wherever these 3 points are meeting it, the investor should invest broadly. And our view basically is to invest specifically in particular stocks rather than sticking to any industry per se.
Stock picking is the mantra that, Hemant swears by right now. So if you call this a stock pickers market, which are the sectors that one should, zero in on when it comes to stock picking right now?
So, for example, you can say the auto ancillary sector we are very bullish in. And auto ancillary means every auto ancillary, whether it is traditional, conventional auto ancillary, as well as the new age auto ancillary, which are catering to the electric vehicle space. So auto ancillary per se seems we are very bullish on for 3-4 reasons. One, the chip issue globally seems to be sorted out. Second, India is, according to us, and I think the world can also relate to it, as an engineering hub. Third, the capex cycle is again on the up move with respect to auto, of course, with respect to industry as well. And fourth, the space and the raw material part is absolutely now smooth. Basically the supply chain is absolutely smooth, and the demand is reasonably intact, and I think it is going to go up and rise in the near future as well as in the long term.
Right. We just had the Q4 earnings season, concluding. In fact, I wanted to understand which of the sectors you think is standing out after the fourth quarter earnings. And, should one stick to large caps now, or, is it time to look at some of these mid cap names as well? And if you large caps, which are the large caps that you would recommend, for our viewers today?
So I think by far the result season is almost over, and the results are much better than expected. The pool of better results are much more than the surprise bad numbers. But in particular, the banking sector, particularly the PSU banking sector, is the space where one should focus on, where there is visibility. We have seen the balance sheets of Indian PSU banks at its best in FY23 and likely to do more. I mean, any management we speak with, they are also expecting at least 12 to 15% credit growth, and the credit growth seems to be going strong and in the right direction, it seems. So that space, particularly PSU bank space, is where we are looking for, where we should, and even the investor should look for. And as I said, auto ancillary is the space where we are focusing on. And auto ancillary, I mean the auto ancillary, as well as you can say the bearings, you can say the railway component parts, the engineering parts. I mean, this is the space where we are very bullish.
Right. I want to also get in your thoughts on the IT space. Of course, that space has been pretty disappointing when it comes to fourth quarter performance. But, given the valuation comfort, would you look at buying any of the Infosys or TCSs, or would you look at some of these mid-cap names that have, outdone their larger peers now?
Right. I think we'll have to be very stock specific in the IT space, at least for the next 2 or 3 quarters. The macros are challenging. The dependence on the US economy is very much important. The capex cycle in the US spend in terms of tech is also important. I think we'll have to cherry pick in the mid cap space rather than the large cap, at least for the next 2 or 3 quarters. If you want some outperformer, I think we will definitely find the outperformer in the mid cap and small cap space rather than the large cap. This is our view.
Right. Would you be looking at any of these new age companies now, given the fact that, managements have given some color on the path to profitability? So something like a Paytm or Zomato or Nykaa at this juncture, any of these stocks would appeal to you now?
Zomato seems to be in a good sweet spot. And I think the commentary of the management and the way we are ordering, the way general public and our next generation is ordering every week and every day almost. I think the way Zomato analyst meet was also conducted, they are also saying that they should be profitable by the end of the Q4, which is really promising. And Zomato is the only stock where we are quite positive on, frankly. I'm not tracking Paytm, I'm so sorry.
All right. So Zomato looks interesting at this juncture. My last question to you, any multi-baggers that you're spotting at the current juncture from, the mid and small cap space, and some of the winning bets in your portfolio right now, if you can share with us?
I don't know whether I can share stock specific, but with a disclaimer that myself or our clients might hold it. We have invested in a company called SGX Enterprise, which is of course an auto auxiliary company, and it's in a very sweet spot with some inorganic growth. We anticipate at least 40-45% CAGR growth for the next 2 years with this inorganic acquisition also, and it is a profitable EPS assertive acquisition. I think there is value, validation, and visibility. These all 3 criteria seem to be meeting in this particular stock idea. So this is where we have also invested in our portfolio stock also. Yes.
Right. All right, Hemant, with that, thanks a lot for taking out time and joining us this morning and sharing your strategies with us. But let's go back to Kunal then and talk about specific stocks and some queries that are trickling in. First of all, Hindalco is expected to report its earnings today. Revenue seen down 2.5%. EBITDA may, slump 50% on a YY basis. And standalone margins are seen at 8.85% versus 17% or thereabouts. Profits, of course, will be, are expected to go down by 60% on YY basis. Given the fact that the stock hasn't really done much over the last 5 sessions, but it's off its 52-week close. Do you think it's coming out of a downtrend? And once the earnings are out of the way, one could actually look at buying into this counter?
Yeah, I think, Nandita, if I look at the entire metal space, they have given a lot through volatility because all the prices are linked with the global prices. So it's a sector where the volatility will always be very high. Specifically talking about Hindalco. Hindalco, the chart structure doesn't look very attractive to me. 433 is a very strong resistance for the stock. We had recently seen a rising trendline breakdown as well on Hindalco. So we might continue this downtrend as well if 433 is not taken out. Now, post results, if the results are good and we see some buying momentum coming in, I would recommend someone to initiate long positions only if Hindalco closes above 433. That is where you will see the actual strength coming back into the stock, and the stock might go up to the levels of 475, 480. But at the current levels, if you talk about the structure, it's not looking very good. I would say one should avoid, wait and watch for the results to come out, then probably one can take a bet.
All right, at the moment it's an avoid. Rupak, Mehta and Siva had queries on Hindalco. Hope this answers your query. Let's also talk about, take a query on Glenmark. This one is coming in from one of our viewers on the feed. I've kind of lost his name. But after earnings weren't all that great, how would you advise investors to look at this stock now, Glenmark?
So I think Glenmark, if I talk about on 3rd of April 2023, there was a very strong breakout on the technicals around the levels of 450 or so. From there onwards, the stock has rallied up to 600. So you can almost say a 30% rise in the price, what we have seen in the last 1.5 months or so. And I think now the stock is facing some hurdle at the upside. So definitely not at the current levels. I would recommend to go long. If you are holding already long positions, one should definitely keep on holding it. But if you want to buy fresh, wait for dips to buy the stock. The structure looks extremely good, but the ideal buying point would be somewhere around 550, 540 zone. Currently, it is trading around 600 or so. So you can say probably a 10% correction would give you an ideal opportunity to initiate long positions as well.
All right, that's the call on Glenmark. This query was coming in from Vijay Kumar. Hope this answers your query. I also want to get in your thoughts on the Adani Group of stocks. Kunal, a couple of queries trickling in today on how to play Adani Enterprises and Adani Power, given the fact that, on the back of news flow, these stocks have, literally clocked in a very handsome rally over the last few sessions. Wait for a dip to get into it, or, just ride the rally and take positions?
I think definitely one should wait for a dip, specifically if I talk about Adani Enterprise. The stock has seen a massive run up in the last 2 days or so. The risk reward doesn't suit favorable at the current levels. The ideal opportunity to buy the stock would be somewhere around 2400 zone. So I think wait for the dip, what you can get into the stock, utilize that dip to initiate long positions. We can expect on the higher end the targets of 3000 on the upside, where the next resistance zone is for the stock. So if you get any dip, try to accumulate on that dip. Lower end, the support, as I told you, is somewhere around 2,400. From there onwards, we will again see the buying coming in and the stock going up towards the levels of 3,000. But if I talk about the entire Adani Group stock, one stock which I would like to highlight is Adani Ports. I think Adani Ports looks extremely good. Even in this volatility what the entire group had witnessed, it was Adani Ports which was standing very strong. Even in yesterday's trading session, we witnessed some correction from the higher levels because the stock had seen a sharp rally. This correction, what you have got in the stock, would be an ideal opportunity again to initiate long positions. 720, 710 is a very, very strong demand zone for the stock. I expect the stock to go higher towards the levels of 780 to 800.
All right, so those are the levels to watch out for there. But let's also talk about Sun Pharma. This stock will be in focus given the fact that its subsidiary Taro has reported earnings, and profits are down 75%, operating income down over 50%. So, Taro earnings have not really been very enthusing. Given the fact that the stock is stuck around that 930, 950 range, do you expect some bit of a downside coming, or do you expect after the earnings come out next week for the company, one could look at taking positions and wait it out for the stock to hit 1,000 rupees and then take some profits?
Yeah, I think definitely one should wait and watch. If I talk about Sun Pharma, the structure in the last 1 to 2 months, It has been in a complete downtrend. We are seeing lower high, lower low formations which are there. Now the stock is trading at a critical support zone of 930, 940. This has been generally the zone from where the stock has witnessed rally on the upside. So clearly it's a demand zone what we are seeing at. If you want to place a bet on the long side, just till the results are announced, one can expect the upside targets of 960, 970 on the upside in the very near term. And on the downside, the support is at 920. So from the current levels, I would definitely say one can initiate long positions because of the very good risk reward what you are getting. But on a long term perspective, the chart doesn't look very attractive to me at the current levels. I'll be aggressively bullish on the stock only above the levels of 970.
Right, chart structure not looking very good for this one. Let's take up a query on Polyplex. Then there is some bit of news flow regarding this company. In fact, it was a Moneycontrol news break which has been confirmed. Polyplex is looking to sell 24% stake to AGP Holdco for somewhere around 1379 crore rupees or thereabouts. If you look at the stock, it has just started performing over the last month or so. It is up 22%. And we also have a query coming in from Orson Fernandez on this stock. Time to ride this rally, Kunal?
I think definitely from the levels of the correction what the stock had witnessed from 2,800, the stock made a low of 1,140. So you can say almost a 50% correction in the stock what we have witnessed from the higher levels in the last 1 year or so. Clearly trading in an oversold territory. The trend has already changed in the last 1 month or so, where we are seeing again the higher low formations which are clearly intact. One should definitely buy the stock at the current levels. 1650 is a critical resistance for the stock. Once that is taken out, I expect the stock even to go towards the levels of 2000 on the upside. So from the current levels, one can expect at least a 20% kind of upside from the stock on a positional basis. The lower end support for the stock is now placed somewhere around 1380. So as long as 1380 is not breached on the downside, I'm bullish on the stock. First hurdle is at what we mentioned is at 1630, 1640. Once that is taken out, we expect targets of 2000 on the upside.
Right, that's the view on Polyplex. Let's take up a query on Engineers India Limited. This one is coming in from Adi, and he wants to know your thoughts on this stock. Now, this stock has been doing extremely well and, just about rubbing shoulders with its 52-week highs. Should we expect a new all-time high for this stock in the next couple of sessions?
Yes, definitely we could expect it, Nandita, because the kind of breakout what we had got in the stock on 3rd of May with massive volumes, post that breakout, the stock has been consolidating in a sideways trend and is ready for its up move. The resistance for the stock is at 103. Once that is taken out, expect a sharp rally in the stock towards the levels of 120. So if you are already holding long positions, keep on holding it. But if you want to initiate fresh long positions, wait for a breakout about 103. Above that, one can initiate long positions with a stop loss of 94 on the downside and expect targets of 120 on the upside.
Right, I want to quickly get in a query on PVR also. Arpana has written in and wants to know your thoughts on this counter. Now, yesterday, this stock took a dive after 3 p.m., somewhere around 1340 levels. What should one do with this now?
Yeah, I think the trend has been extremely bearish for PVR. It is trading in a clear-cut downtrend on the chart structure. The chart doesn't look very attractive to me. Since it is trading in a mild oversold territory, we can expect a mild pullback if it sustains above the levels of 1430 on the downside. So if you want to initiate long positions, keep a strict stop loss of 1430. If that pullbacks come, it will take the stock toward the levels of 1500 on the upside. But if that 1430 level, which is a very, very critical support, if that is breached, expect further 5 to 6% correction on the downside.
Right, charts looking bearish for PVR. Very quickly, one last query. Satya CK wants to know your thoughts on NLC India. Now, this stock is up, just about, it's near about its 52-week highs. Over the last 5 days, it has gained 8%. Do you expect some bit of a cool-off to happen, or do you think this upside will continue?
I think definitely this upside will continue. If you look at the chart structure, it has given a very good breakout. The resistance of 94 was a strong resistance yesterday. We got a breakout from those levels. The entire structure has been very bullish for the stocks, even on the long-term chart. The kind of volume buying what we have seen in the last 1 to 2 days is massive, and that will add a lot of support for the stock on the downside. Now, the support on the downside is at 88. As long as the stock stays above this level, we expect the momentum to continue towards the levels of 101 first, and the next level would be 110 on the upside.
Well, expect levels of 110 on Nivali Lignite. Well, I hope that answers your query. With that, we have come to the end of this query segment. But Kunal, before I let you go, leave us with some stock recommendations this morning.
Yeah, I think if I talk about a sector-specific approach, since the market is going to be extremely volatile in the next 1 month or so, with the global news coming in, we have to focus on sectors and stocks which will do well. One sector which I'm particularly very bullish on is the tire space. Now, tire space has been very attractive in the last 1 month or so, where we have seen massive buying from the lower levels. From there, my top pick would be Apollo Tires. In yesterday's trading session, the stock has given a breakout from a big consolidation range. That is the resistance which was there at 373, 374 was taken out by volumes. We expect this momentum to continue on the upside towards 390, 400 levels on the upside. The downside support is now placed at 370. So one can initiate long positions in Apollo Tires from the current levels. My second pick will be from the auto space. As we mentioned in the show as well, that the auto pack has done a lot of buying has been seen from the lower levels. We expect this momentum to continue going forward as well. And from there, my top pick would be TVS Motors. If you look at TVS Motors, it has been a massive outperformer in the entire auto space in the last 1 year or so. Even when the auto stocks were not doing well, it was a TVS Motor from the two-wheeler space who did extremely well. We expect this momentum to continue on the higher end. 1220 is now a very strong support on the downside for the stock. One can initiate long positions, look for targets of 1300 to 1320 on the upside.
All right, Apollo Tyre and TVS Motor, two stock recommendations coming in from Kunal this morning. With that, Kunal, thanks a lot for taking out time and joining in this morning. Well, that's all about time that we have on this edition of Morning Trade. So it's a goodbye from me, but stay tuned because coming up next is Opening Bell.